Good afternoon, welcome to the weekly market video. We've got Bill here again. And first off, Bill, let's start off with the non-farm payroll month on Friday. Higher than expected, higher than your prediction as well.
Very much so, yeah.
What, was a bit of a surprise?
Pleasant surprise.
Yeah.
I was expecting 140. I know that the Bloomberg consensus was still 151 even after the negative ADP number. And I think one of the things where people were not concerned, or probably relieved, is the rate went from 6.6 to 6.7, feeling, and the reason for that is there were that many more people going into the jobs market.
But these numbers are all based on guesswork anyway, aren't they?
Of course not. Yes.
No one really knows.
No, and the thing that we should, at least to our viewers, the weekly jobless claims are not seasonally adjusted. It's the number of people that literally come in that door. And as we both know, if it's 40 feet of snow in Minnesota, or if it's 200 degrees in Phoenix, Arizona in the summer, people just, either can't get there or don't get there. So therefore, we were seeing probably an artificial number in the jobless claims because of the polar vortex.
But anyway, is it signs that things are starting to turn around now?
Yeah, I think so, and we saw that briefly today, when we got U.S. retail sales. Not dynamic, but the Bloomberg consensus was 0.2, it came in at 0.3, and we did see another slight drop in the jobless claims. So I think, the market feeling that the U.S. consumer is feeling better, but even had we gotten the Bloomberg 151,000 for the non-farm payrolls, what we were seeing was an increase in withholding, which was positive that people, you can only withhold tax if people get a paycheck. So the market felt that, even at 150, that would have still been a positive because of the tax consideration of what was happening.
Okay, and so obviously the sterling dollar rate is very highly connected to the jobless number, and it came down, but it seems to have gone back up again, 167s again, we're up at the top, Euro's highs for goodness knows how long.
Well, when we had this discussion last week, I was expecting the ECB to drop rates 10 to 15 basis points. Whether it's Magic Mario, Super Mario, don't have a clue Mario. He talked up the economy, talked down disinflation, and was sort of positive on inflation. But now the key is going to be, as you just said, 139. I think it was close to 139.67. I think was the high of today. And from my standpoint, although I have to look at things so much short term, even after the ECB's no change in rates last week, we were just looking to advise clients that short term buy the euro. How high will it go? 139, 140, 141. My feeling is we get to 140-ish. Maybe you get out of that trade.
That's breaking point.
Yes. I think it's got to be, At one point, the ECB has to, and if you look at the global inflation numbers, there is none, And the general inflation picture in the Eurozone is deflation to disinflation, And we right or wrong, we see this in China. But then going back to your original question about sterling, I think we've had 4 times since July. Excuse me, the most recent was Tuesday, when Governor Carney spent, I think, all day long at the Treasury Select Committee. I think he had nice tea, nice lunch, etc. For the 4th time since July, he has talked down the idea of no rate cuts until the second quarter, probably with expecting February. But again, foreign exchange, 167, 168, 169 for sterling. And again, continuing sort of, not sell-off, but not buying the footsie, So the market doesn't believe what the bank's saying about interest rates not going up until February of next year.
Really? So that's why we've seen, the FTSE's off 4% in the last 12 trading sessions or something. It's a big move.
Yes, it is. And as we mentioned last week, forget business, and we'll see this in next week's budget. The government is saying we'll have no solid recovery until we have the consumer, Well, now, if interest rates start to go up, what do we have? 3.5 million people on floating rate mortgages. Well, they're not going to be getting a 15 or 20% pay rise. Their electricity bills will stay the same, etc., will stay the same. And if they have to pay another couple of £100 a month in mortgage payments, well, that's not going to help, quote, a consumer-led recovery.
But generally, this consumer in the UK is quite strong.
I think so.
But it's, you're saying that that's going to
I think
decrease when
we're seeing, whether it's the UK, remember, there are 2 UKs. there's UK London, and then there's UK outside of London, okay? And of course, the guys that are making $1 billion a year, this, that, and the other, they don't really care whether the sales tax is this, that, or the other. I don't think Roman Abramovich has a mortgage or knows what a mortgage is. So that's not going to, but I'm talking about, the general man on the street. I mean, the people that I see in Pusey, Wiltshire, okay, will they stop going to the co-op and then start going to Waitrose, Sainsbury's, Tesco's, etc.? No, they're still at the co-op, they're still at Aldi, and they're still at Life.
Exactly. And speaking of supermarkets, Morrison's came out today and they had a terrible set of results, and that's impacted all the supermarkets. Do you think maybe this is at the end of big British supermarkets? Are we going to be taken over by the discounters, the onliners?
Well, I think we will, because didn't Tesco recently come out and say, well, they're not going to do any more of these mega stores, they're going to do corner shops, etc., etc. Right or wrong, one of the biggest holders of Tesco stocks is a person who buys for the long term, and that's Warren Buffett.
Yeah.
He has dramatically reduced his position on Tesco, basically feeling that they may have, quote, lost the plot. And I think you may be right, okay? I just see it where, again, in my village, which is 6,000 people, but there are probably more villages of 6,000 people than there are cities of 20 million in this country, okay? And there's always a queue at Aldi, Lidl, the Morrisons, okay, in the next town, and even at the co-op, and so, they're not buying caviar, they're not buying Dom Perignon. They're still buying Coca-Cola and burgers and stuff like that. So I think it's going to be difficult. And I think, again, the consumer, and we know rates are going to go up, but even the bank says they're probably not going to be more than, and my feeling is in the next 3 to 5 years, they probably won't be more than 3 to 3.5%. We're not going to get back to the inflation years of the late 70s, mid-80s.
No, that's what Carney said, isn't it?
16, that's, there's too much of a global economy to have any major inflation. And one of the things, we talk about energy prices. You see now that, sort of maybe is this a sort of Putin, don't try to blackmail Europe. You see the U.S. is going to be selling 5 million barrels out of this. Let me see if I can say this, strategic petroleum reserve. Don't ask me to say it 5 times, the SPR, come next week, okay? Basically saying that, with fracking and with domestic production growing up, we don't really need in the States to keep reserves up for a rainy day.
Okay. China's at it again. Disappointing. Is that how much of this sell-off in the FTSE down to China, do you think, and how much of it is the concerns in Crimea? And
well, maybe I'm being naive, but we saw the major sell-off the other day with with iron ore and copper, and of course clobbing the Aussie dollar and the Australian stock exchange. Now today it didn't seem to have too much of an effect because I think most people were expecting a neutral to negative number. But again, I think the focus really is on the referendum in the Crimea on Sunday. Okay, and maybe I'm totally wrong about it, but I think from our standpoint, this is local business, okay, rather than what's happening in China.
Yeah. And so why would that affect the UK and obviously the Germans are very closely linked with Russia in terms of energy supplies, but the States hasn't really. The S&P's still up there, isn't it?
Yes. Again, it probably, as you just said, it's probably more of a local, because the key is, I don't know how much of our energy, 35–40% of European energy comes from Russia, okay? Russia's, made some kind of deal with Gazprom and this, that, and the other. But again, it's a question of, we're not going to go to war by any means, but, what we have seen now for 3 weeks, saber rattling and one country saying, well, you can't just take over Crimea, and Russia saying, well, Crimea already belongs to us, and then we're going to see what happens. And it's going to be a question, and I know there were 1 or 2 articles in the paper the last 2 days, is Russia really taking advantage of, let's just say the UK? Look how much of a reduction in our armed forces that we've got, okay? I think we're going to have, quote, fewer troops by the end of this year than we had, in the Crimean War of 1858. Okay, so, are they just saying, okay, with your 2 tanks and one submarine and your aircraft carrier that hadn't arrived? So it's going to be quite interesting to see if push comes to shove. Hence the reason I think that's what the U.S. has decided to do with their selling of the SPRs. They're saying, okay, we don't need, we can provide. Now, will that mean then a continuation of the fracking in the States and the LX, the Keystone pipeline, which again, it's a question of, the laws will have to change because, quote, the U.S. has not been authorized, legally authorized, to export oil. But I mean, if this pipeline occurs, you're going to have oil that will be readily available at 15 ports, both on the East Coast and the West Coast. Okay, so the old tankers, instead of leaving, Saudi in Venezuela, could be leaving Cushing or New York City or San Francisco. So it'll be quite interesting. I hope. I get scared because I don't know. I mean, I read the statistics, and 68% of the people in the Crimea are Russians, and this, that, and the other. And I mean, one thing that we have seen in the last 10 years or so is some of the older Chinese, some of the older Russians yearned for the good old days when I really didn't have to do anything, and I got a guaranteed salary and a guaranteed bonus, and et cetera, et cetera. But I mean, from a personal standpoint, our company has done 2 seminars in Kiev, okay? The most recent was like 2 weeks before this all started in November. And the thing that I noticed dramatically was, the age difference, the late 40s to 70s, okay, were good old hardcore communists in this, the 20 to 45-year-olds were, forget communism. I like my new Porsche. I like my Jimmy Choo shoes. I'm into LK Bennett's. Okay, so I did see on the ground in 2 instances a dramatic difference between the old Ukraine and the new Ukraine.
Interesting. Before we finish up, let's just have a little rundown. It's been a boring week, days-wise. Really not very much to look forward to. What have we got to look forward to?
Well, next week will be the Fed.
Yeah.
Tuesday and Wednesday, okay? And
is that important? How?
It's important for 2 major reasons. One, it's the first meeting chaired by Janet Yellen, and 2, her first press conference. But the fact is that I don't know anybody out there that feels that there'll be any change, okay? We will get probably an announcement of moderate to modest growth, continuation of another 10 billion in tapering. I mean, as we saw yesterday, the Treasury 10-year, okay, grossly oversubscribed, okay, at an interest rate 1 basis point below, okay, the rate that was going to came in at 2.72%, okay. Now, maybe we should mention our good friends PIMCO, but PIMCO last May was talking, 10-year going to be 3% by the end of the year, 3.5% by the middle of this year, 4% by the end of the year. Well, as we can see, there's been a sort of shake-up in management. But, the bond market does not seem to be affected, or is the bond market just being bought because of the concern about what's happening in the Crimea? But I see the Fed no change, modest to moderate growth, and it'll be quite interesting to see, if there are any comments or any Q&A in reference to how is the Fed looking at the implications of tapering to or towards the emerging markets, okay? Now, we can say that now, but again, by midnight, Sunday night, it may all have changed, okay? Yep. If without the Crimea. So therefore, what I'm saying now is based on almost 2 o'clock this Thursday. By Sunday night, it could all dramatically change if Crimea agrees that they've had enough and they're going to secede. Then what happens, Russia says, well, they can't secede. Russia says, well, of course they can't, they belong to us anyway. So that's my feeling. But right now, based on where we are today, I see no change with the Fed, a continuation of the tapering, and again, probably another continuation of the comment that the worst is over in reference to the weather and any weather-related data.
Oh, brilliant. So, got to be careful if you've got a position open on Friday night for
I think we could have a very active day on Friday up till about 2 o'clock.
Right.
And then everybody will be prepared. Everybody will probably be flat, okay? Because you probably see, whether it's gold, whether it's stocks, whether it's commodities, whether it's foreign exchange. I mean, volumes are probably 20 to 22% below normal. So yes, I would expect tonight/tomorrow. What business will be done will be up to, you know.
And then the open on Sunday night, we'll see.
Yeah, I think so. Yeah. So be prepared, because Japan or Asia will have opened probably. I don't know what time we're supposed to. I don't even know what time the voting is. But remember, Asia will be probably open at least 50% after we've got, you know, the results from the Crimea. So.
Thank you very much, Bill.